What is up, guys? Roger here with Vantage Home Loans. Really interesting video today. We're going to look at this whole inflation story. It's the biggest buzzword the last year. And I read a really interesting article from the Wall Street Journal that breaks down why this inflation story situation could possibly be a 5 or 10 year thing that we're going to have to deal with. So this is something that I never even really considered. There's a few interesting aspects that the article points out that I want to share with you guys, because based on this article, there's a chance that this whole inflation thing is not like a 1 year thing and then we're in the clear. So let's just dive right into the article and show you guys what I'm seeing here. Okay. So the title of the article is Jerome Powell Dilemma. What if the drivers of inflation are here to stay? So central bankers worry that the recent surge in inflation may represent not a temporary phenomenon, but a transition to a new lasting reality. Okay, so we're going to dive into why that is. To counter the impact of a decline in global commerce and persistent shortages of labor, commodities, and energy, central bankers might lift interest rates higher for longer than in recent decades, which can result in weaker economic growth, higher unemployment, and more frequent recessions. The global economy is undergoing a series of major transitions, says Mark Carney, a former Bank of Canada and Bank of England governor, in a speech at an economics conference in March. The long era of inflation, suppressed volatility, and easy financial conditions is ending. Why would Mark Carney, the former Bank of Canada and Bank of England governor, say easy financial conditions are ending? Very interesting line right there. So let's dive in deeper. So as we all know, today is Thursday the 25th. Tomorrow there is a Fed meeting in Jackson Hole, Wyoming. So let's just get into the first reason this whole inflation situation might be going on for much longer than we anticipate, and that is globalization. So increased flows of trade, money, people, and ideas flourished with the Cold War's end and China's entry into the international trading system in the 90s. Multinational companies using new technologies constructed global supply chains focused on driving down costs by finding the cheapest place and workers to produce goods and products. Worldwide competition drove prices lower for many goods. This helped the U.S. keep inflation stable over 20 years. That ended in 2019, when U.S. goods prices rose an average of 0.4% a year and 2.6% annually. After the pandemic and the Ukraine war disrupted supply chains, many business leaders adopted new processes to increase reliability. That's an important word right there. Even if it costs more, such as moving production closer to home or buying from multiple suppliers. Add tension between Western democracies and China and Russia raised concerns about the possible further retreat from globalization and a rise of protectionism, which would raise production costs. Okay, guys, let's unpack that right there. So transferring from globalism to protectionism, what does that mean? So the way I'm reading this article and understanding what countries are doing is we relied too much on China. We relied too much on Eastern Europe and places where labor was really cheap. So when labor is cheap, products can be made cheaply. Everything stays cheap, prices stay low. But two major things happened. COVID happened and the war in Ukraine and Russia happened. Both of those things crushed supply chains. Excuse me. So what is this doing to change the mindset of countries? So now if you're the US, you're like, hey, we just had a pandemic. What happened? Supply chains got shut down. What happened was, as a result of that, we can't get the stuff we need from China. we can't get any of the stuff, and we're not making it here. So the prices of everything skyrocketed. Same with the situation in Ukraine and Russia. We're getting a ton of wheat and corn from Ukraine, and now with the war, we can't get our wheat, we can't get our Ukraine, we can't get our corn. I apologize, guys. I feel like my mind is going way too fast and my mouth can't keep up. So globalism, right? So we were used to getting everything cheaply, globally, China, whatever, Ukraine, we're used to getting everything globally. But the downside, which we realized through the pandemic, we are relying on everybody else. And what happens when those supply chains get cut? We get fucked. That's basically what's happening. We got totally screwed. So we are in the process of transitioning from a globalized economy to a protectionist economy, which means we're gonna grow the stuff we need here. We're gonna create the products we need here on our home soil. Now, what's gonna happen when we do that? People in the US are not gonna work for the same wages that people worked for in China. I don't know the numbers. I don't know the exact wages that people worked for in China, but I'm guessing it's much, much lower. I don't know, $1 or $2 an hour. No one's going to work for those wages in America, right? So if we're going to create all of the products that we were getting from China, and we're going to do it on our home soil, and we're going to do it with wages that are 5 or 10x what wages were in China, then the products are just going to be way more expensive. So is inflation really going to go away? Is there a chance that this is the new normal? Okay, as we go through this process of shifting, bringing all of those processes, all of those things that we were importing, starting to build the infrastructure here in the States to produce the same goods. That's going to take time. It doesn't happen overnight. It's going to take years to build the infrastructure and create those, items that we were importing, creating them here. Same thing with wheat or corn or whatever else that we were importing from Ukraine. This is all going to take years. And if it takes 5 years to 10 years, and during that same time, we're paying much higher wages to produce those same goods that we were getting for a fraction of the price from China, the cost of everything is going to stay high. There's no room to lower prices. So I don't know if this is going to happen for sure. I'm not an economist. I'm just interpreting, and based on my experience and my common sense, when I read articles like this, it makes me wonder, is this inflation just going to go away in a year and we're going to go back to normal? Or is this something that's going to take 5 or 10 years to resolve? So there's a couple other points. That's the main point in this article, but there's a couple other points we should dive into to kind of get the full story. So force number 2, labor markets. We kind of covered that, but let's just dive in. In August 2022, in a book in August 2022, The Great Demographic Reversal, former British central banker Charles Goodhart and economist Manoj Pradhan argued that low inflation since the 90s had less to do with central bank policies and more to do with the addition of hundreds of millions of low-wage Asian and Eastern European workers, which held down labor costs and the prices of manufactured goods exported to richer countries. Mr. Goodhart wrote that the global labor glut was giving way to an era of worker shortages, hence higher inflation. According to analysis by Didem Tuzman, an economist at the Kansas City Fed, its growth had already slowed before. Okay, so we're talking about workforce growth, already slowed before COVID-19, reflecting an aging population, declining birth rates, and less immigration. The slower the growth of the U.S. workforce could force wages higher, feeding inflation. So again, same kind of issue. Less people are coming to the United States, lower birth rate, less people here to work, and then the population is aging. The baby boomers, the boomers are getting old. The baby boomers are not going to hold these jobs that they once did because they're getting old. You know, my dad retired. A lot of people watching this video are between the ages of 25 to 35, you know, ish. So all of our parents, they're headed towards retirement. All of these people are going to be taken out of the workforce, less immigration, and with all of the money being printed and the TikTok, you know, all of these people going into, you know, these types of jobs. You know, if you can become a TikToker, why would you go work for minimum wage, especially when a minimum wage is 12 bucks, 15? I mean, people don't want to work for 15 bucks an hour. So now you're going to have to raise those wages to 20, 25, 30 bucks an hour. The cost of products and goods is going to go through the roof. So this is something to keep an eye on. We may be headed towards a new reality. As we talked about in this article, this might be the new normal. So we might have to get used to being more reliable on ourselves. We don't have to count on China. We don't have to worry about a pandemic. We don't have to worry about a war in Ukraine or Russia and supply chains getting cut. We're going to have to build it here. But if we build it here, it's going to be more expensive. So let me know what you guys think. Do you guys think this is possible? Like, do you think we're going into a new normal of this is what costs of goods are going to be? Gas is going to be higher. Food is going to be higher. This is just going to be the new normal? Or do you think we're, you know, raising rates is going to fix inflation? We're going to go back to normal? Let me know your thoughts in the comments below. If you found this video insightful, leave a comment and a like, and I'll see you guys on the next one.